Hope everyone's doing well and had a good day today. This is the Emini end of day review for Wednesday, July 31st, 2024. So a couple things coming into the day. It's important to know that it's an FOMC report day. And what's interesting, actually before I get into it, I want to mention this is going to be a shorter review than usual. I'm pressed for time today. But it actually works out today because the fact that it was an FOMC report day, you can look at FOMC days as two different days where the first day ends just before the report is released, and then the second day begins on the bar where the report is released. I forget if Al mentioned that, but I know I learned that from Ali. So it's good to know coming into the day the overall context and the expectation on an FOMC day is quiet, typically trading range price action going into the report, and then it's typical to find range expansion, maybe several reversal attempts. Then the market will either convert into a more broad trading range or into a trend. In today's case, we had the interest rate decision released at 2 p.m. Eastern Time, and then Jerome Powell, the press conference at 2:30 p.m. Eastern Time. So for me, and this is what Al recommends, it's best to be flat going into the news events, especially one involving the FOMC interest rate decision or minutes, or whenever Fed Chair Jerome Powell speaks. And the reason for that is that if you're watching this video, you're a human and you're competing against these computers that can receive the news information instantaneously, and they have the advantage of searching through all of these different algorithms and information, and we just don't have the advantage in that case. The computers have the edge. But as always, you don't really need to know what the news was. You really shouldn't trade based on the news. All you need is the price action on the chart in front of you. That's all the information you really need to be placing trades. But it is wise to be flat going into the reports and maybe 15 minutes after the reports. So for me, coming into the day, 2 p.m., I would rather be flat than in a position, and probably not take a position between 2 p.m. and 2:30 p.m. Eastern Time. Coming into the day, we had yesterday was a reversal bar. Even though it has a bear body, it's a bull bar closed above its midpoint. Remember, we had two legs down, solid closed bears here, trapped, disappointed by the two bull bars. Technically, this bar is a bear bar, closed below its midpoint, but it's a 2-bar pullback. And so on a retest, we can see bears who sold here, scaled in, they're disappointed, they're buying back shorts. Bulls buying, betting on a double bottom. So we had buying into the close of yesterday. I always forget this is the reason what I just said doesn't really make sense. How could it be that there's this big tail, but we only had this 2-bar rally at the end of the day? I was showing the extended hours chart, but even still, if you're looking at the day only session, buying into the close, today would have gapped up, So this is what the day-only session daily chart would look like. I just like to show the extended hours, the Globex session, because there's less gaps. It's easier on the eyes. Either one works though. So coming into the day, we had a large gap up, and then a bear reversal bar on bar 1. So we gapped up and closed above yesterday's high. So it's a bull breakout attempt, but so far, bad follow through. However, it's usually best to give it at least 2 bars to assess how the market's reacting to the gap up. You could say it's rejected based on bar 1, but typically you can look at the first 2 or 3 bars and then make that decision. So bar 2, we had a small inside bull trend bar. Trading range bar, probably going to get a second leg down after bar 1, maybe test yesterday's high. Obvious magnet, very close. But bar 2 is a bad sell signal bar. There's probably buyers below. Plus it's an inside bar, so breakout probability is reduced. As far as buying above bar 1, again, you're buying an inside bar after a strong bear bar. So maybe not ideal. Probably sellers above 1. And then 3 we went outside down, so 3 rallied, trapped bulls buying, and then fell below bar 2. But now we have an outside bar at support and 2 legs down after a gap up. So bears selling for any reason may look to scalp out, betting it's 2 legs down, expanding triangle, low in a trading range at support. So there might be more buyers below bar 3, at least for a scalp. And then 4 remained an inside bar, so now we have 2 legs down, 1, pause, 2, pause. 4 being an inside bar reduces the probability for breakouts, so not an ideal stop order buy above. But after the big gap up and a 2-legged pullback to support, some bulls will take the trade, others will buy below the bar, betting the bear breakout will fail, and if we do get a third breakout, it'll be a wedge bottom, maybe a wedge bull flag. 5 triggered the buy above, small bull bar, weak stop order sell signal bar, probably buyers below. The market's in a trading range open, and it's unlikely that bar 1 will remain the high of the day, so we'll probably get above bar 1. But we could test the new low first. 6, a third consecutive bull bar, but still within the range of bar 3. So if bar 3 is a trading range, we have a small inside bar here, a bigger outside bar, the market's sideways, we're still at a lower high. So the bears have lower highs, the bulls will argue they have higher lows, so maybe the market's in a triangle, it's in breakout mode. 6 is a high 1 at the top of this trading range. We may get vacuumed up to a new high, but probably sellers above. 7, going a little higher. We went to the new high, but the breakout failed. But now we have 4 consecutive bull bars in a micro channel, so the odds are there's buyers below. The first reversal will be minor. Bulls will buy below 7. Bears would rather sell below a micro double top. Bears can argue it's a double top with bar 1 and bar 7, but again, this momentum is too strong. Bears would rather sell after a second reversal. So we're going higher on bar 8. And now we have 5 consecutive bull bars. Maybe it's by the close. And at this point, probably always in long. You could argue it's always in long coming into the day with the big gap up and then only 2 smaller, relatively small bear bars compared to the gap up. So it could be always in long coming into the day, but once you get a rally like this and then close at a new high, it's probably always in long, buy for any reason. 9 going higher, the micro channel is continuing. The odds are buyers below the first pullback, probably going higher. And then another small buy climax. We had a small buy climax on 8, then a pause bar, then another climax on 10. So it might induce profit taking, and we may start to go sideways here. But still, this is all a strong leg, which will probably get a second leg. Pause bar on 11. Bulls probably taking profits. The reason for that is risk reward. Bulls buying up here, stops all the way down here. Here's 1-to-1. And they're uncomfortable with the position size, and they have to reduce their risk. And one way to do that is to take profits, reduce their position size. The other way to reduce your risk is to move your stop closer, but as far as putting a stop somewhere in here, kind of a skunk location because this is so strong. Any pullback will likely lead to just a deep pullback in a channel, maybe a bull trend, or a trading range. Worst case for the bulls, it's unlikely this leads to a bear trend. Another sideways bar, high 1 above bar 12, consecutive trading range bars. Not ideal for buying, but it is after a strong bull breakout and it's a high 1, so it's okay to buy above 12, but you still have to use a wide stop. 13, bull breakout to a new high. Still a tight bull channel, even though there's a breakout here, small trend line break. Overall, the trend line hasn't been broken. So this is all a tight bull channel, which is a breakout on a higher time frame, so probably going higher, still always in long. 14, follow through, so bull breakout and follow through, minimum follow through, but the odds are there's buyers below. 14, probably going higher. 15, bear trend bar, pulling back, we're testing breakout points. We have the bar 13 broke out above bar 12, which was a weak signal bar. We had bears selling above 12, trapped on 13. 15, we might go a little lower, give them a chance to exit at break even, and then we may rally. We're pausing on 16, testing that breakout point. Some traders will view it as 2 or 3 legs down already. We sold off on 14, pulled back, down on 15, pulled back, down on 16. 15 might be strong enough for a second leg down. Maybe it's 15, pause, then a second push. But overall, this is a bull trend. Better to look to buy. This is a minor reversal. 17, pulling back deeper. So 1, pause, 2. 2 legs down. This is enough disappointment and a trendline break. The bears still need a retest of the highs before they look to sell, but at this point the market may be in a trading range, or at least a more broad channel. You don't get 3 consecutive bear bars, with 2 of them being strong in very strong small pullback trends. And of course, that's not a small pullback. Look at the distance from the low of bar 14 to the low of bar 17. It's about 13 points. 17 is more climactic and bigger than 15, so it may lead to bears taking profits and bulls looking to buy and willing to scale in lower. 11 and 12 may have converted the market into a trading range. We were sideways for a couple of bars, bull breakout, but bad follow through, and then we're going back down and we have a possible expanding triangle. Maybe a couple legs down, a couple pushes up. 18, traders bought the close of 17, so bears taking profits. Bulls buying because the first reversal attempt will likely be minor. We probably at least need a test of the trend's extreme. So now we have a high 2 above 18. It's a high 2 variant. Technically on this chart it's a high 1, but you could argue leg 1, pause, leg 2, and then a 2-bar reversal. Strong signal bar 18. But enough disappointment that there might be sellers at a new high. Spike, pull back, the market's starting to channel up. And then 19, going slightly higher, sideways to up. No reason to sell below 19. We still need a test of the trend's extreme. It's only a doji after a strong trend bar on 18, so probably going higher. And then 20, drifting a little higher, spike and channel. We'll probably at least test the prior high of the day and see what's there. Bulls might look to take profits, disappointed by the sell-off, and bears may look to create a major trend reversal. The problem with the major trend reversal set up here is all these bars are above the moving average, and the bears don't have consecutive big, strong bars. They had a decent bar 15, although not that big, and then a pause bar separating the 2 bars. 17 was decent, but again, not consecutive. But it might be enough to convert the market into a trading range. 21 going a little higher, 4 consecutive bull bars, micro channel, first reversal attempt will probably fail, buyers below, probably going higher. 22, now it's 5 bars, we're obviously losing momentum, good bull breakout bar, but then channeling up to the top of a range. Maybe we get a buy climax. For the bears, it's 5 consecutive bars against them, so they may give up and look to sell higher. Sideways on 23. First pullback below 22 here, which was likely to fail, buyers below, but now we have a high 1 at the top of a trading range where it's better to look to sell high ones when you're high in a trading range. 24 bull bar, probably going to test the prior high of the day. We're very close to it. There's not much selling pressure through here. So for the bears, the major trend reversal argument, decent trend line break, but bad selling pressure on the retest. 25, we broke out. But now it's 2, maybe 3 legs up. We rallied on 18, paused, rallied on these 3 bars, paused, and then a third push. 1, 2, 3. Maybe a double top, maybe high in a trading range. Big up, big down, big up. Sellers above, bulls taking profits. Bears looking to sell for scalps. 25 or 26, we have a high 2. And it's a weak signal bar. You could also call it a high 1 because the market rallied to a new high. But the signal bar is weak. The point is it's high in a trading range. The context is bad. There's probably sellers above. Fairly tight bull channel, but it looks like the bulls are taking profits at a new high and they're not eagerly buying like they were down here. Sideways on 27, sellers above, probably going more sideways to down. Inside bar 28, sellers above, buyers below. The market's in a triangle, breakout mode, but completely above the moving average. We have to test the moving average, but there's probably buyers at the moving average. 29, we're vacuuming down. Might be 2 legs, 1, pullback, 2. So bulls might look to buy, but we're getting closer to the moving average where the bulls might prefer to buy. So they might step aside for a sell vacuum test of the moving average. Overall, the bulls are still getting higher lows, higher highs. So they'll argue it's a bull channel and they'll buy sell-offs and bears will scalp and look to sell new highs. 30 tested the moving average, but you have no bull bars. You could argue these are bull bars, 26, 27, 30, closed above their midpoints. But there's all dojis and a bear bar leading to this test. So we might have sellers above 30 for a brief second leg, and then bulls might look to buy. 31 rallied and sold off. Now we have a low 1 near a bull trend line, near support, the moving average. Also might be near a 50% pullback of the last rally here. Here's 50%, so a little deeper. But bad signal bar, probably buyers below 31. 32 sideways, disappointed bears, bulls buying below, but also not a great entry bar, probably going to continue to go more sideways. And then through here, it's obviously a very tight trading range, and like I said, I'm pressed for time, so we're just going to go through this kind of quickly. Limit order market, very small bars, lots of overlap, sellers above, buyers below. Best to just step aside and not trade during this. So we'll get to 2 p.m. Actually, we can talk about this. So what do we have here? Tight trading range, 2 legs up for the bulls, 43, pause, 45, 46, second reversal. Even though this didn't trigger, you can call this a low 2 variant. Again, it's technically a low 1 because there's no pullbacks through here, but I would call 47 a low 2, bear bar closing on its low, possibly an endless pullback from up here. We're getting lower lows here, lower highs, and then a bear bar closing on its low. That's a bar that bulls will exit below and look to buy lower. And for the bears, they can sell below it, looking for a swing or a scalp, really. It's a reasonable stop order short. 48 triggered the stop order sell and then became a bad stop order buy, even though it's at support. Maybe this triangle, the bulls have a trend line, but consecutive bear closes, 48 in the middle of the tight trading range. Not ideal to enter on stops, just like selling below 47, really not ideal. It's not a high probability trade. That's why you need to swing. But some traders will take the scalp, exit at a new low. Others will hold for the swing. And 48, even though the entry bar isn't great, it's good enough because there's probably sellers above 48 and not a great reason to buy. So bears can hold short, and then you can see everybody gave up. The bulls gave up on 49. Everybody was selling. Now we have a bear breakout well below many bars to the left, probably going to get a second leg. inside bar 50, pause bar. I know we're about 20 minutes away from 2 p.m. Eastern Time, which is the FOMC interest rate decision today. So best to be flat around this time of the day and just wait and be patient. And then that was a brief second leg for the Bears. Breakout, pause, brief second leg, and then 3 consecutive bull bars, all of them closing above their midpoints, 52 closing on its high, probably going higher, maybe at least test the moving average, and then bull breakout through the moving average. Big down, big up, the market's in a trading range, buy low, sell high. So up here, traders are probably looking to sell. And then 54 inside bar, it's a high one, but it's a bear bar, and it's high in the trading range, so probably sellers above. Outside bar, 55, so there's the 2 o'clock report. Wasn't a major range expansion, but we do have the 2:30 report coming later, so still best to be flat and just wait patiently. Strong enough breakout and leg for the bulls. There's probably going to be a second leg, deep pullback. Maybe we'll go a little higher, above 55, but overall trading range, probably sellers high in the range. 56 rallied and then reversed back down. It's a weak bear bar, but it is a bear bar. It closed below its midpoint, so it was controlled by the bears. Second entry short, below 54, 1, and then below 56, 2. But not great selling pressure. Lots of bull bars, only one bear body. So less traders will be willing to sell below 56, and bulls can stay long if they are long. Maybe look for a test of the high of the day. 57 inside bar, bull trend bar, still not great selling pressure. Probably buyers below, probably going at least a little bit higher. 58 rallying. Now we have 2 legs up, 1, pull back, 2. Might go a little higher. We're getting close to the high of the day, which is a magnet, and we'll probably test it, but we probably will not get a successful breakout above it. Overall, it's been a trading range day, so 80% of breakouts fail. It's unlikely we get a bull breakout that leads to a bull trend. Plus, it's 2 legs up. Maybe we pull back another time and then get a third leg up, and that will make the breakout attempt even worse. 59 pause bar, might pull back, but bad to sell below 59, low probability. It's a tight bull channel with weak selling pressure. Inside bar 60, and consecutive inside bars, so II pattern. Breakout mode, bears will argue 2 legs up, and then a decent signal bar, even though it's mostly a trading range bar. It's a bear bar closing near its low, high in the range. Bears can sell below it for a swing, but it's low probability. Small risk, big reward. More likely, there's buyers below for at least one more small leg up, and then that must be the 2:30 report. You can see range expansion. We got very small here, 6 points, 5 points, 3 points, and then suddenly 13 points. Bull breakout attempt, but did not close above the prior high of the day. That's a sign of weakness in the bull breakout. Plus 3 pushes up, 1, 2, 3, selling into the close. There's problems with this bull breakout. Then a huge pullback bar. We fell below 61, but 61 was a bad stop order sell, so there's probably buyers below for at least a scalp. And then we fell below, and then buyers into the close. 62 is a weak stop order signal bar. Probably sellers above. It's a high one at the top of the trading range. Now this might be leg 1, pullback, leg 2, pullback, maybe one more rally. But again, the context here for a breakout is bad, and the signal bar here is bad. 63, strong bull breakout bar. So far it looks good for the bulls, except for the context. The bar looks good, but it's 3 pushes up, and we're at the top of a trading range day. So better to wait for more information here. Might be more of a sell to close bar. 64, we're going higher. And when I say it's a sell to close bar, the trade there, bears can take this. You sell the close of the bar, put your stop and measure move up, betting that it's a third push. 1, 2, 3. And we're high in the trading range. The context doesn't support a bull breakout. It's more likely to fail. We'll come back and test the low of 63 before 63 rallies for a measured move. So they can put their stop a little above the measured move target, maybe scale in if it goes against them, and then look to fade this breakout. Bull breakout and follow through, but it's a late leg. Again, 1, 2, 3. With leg 3, you're far more likely to get deeper pullbacks and even reversals. Plus, look at the day structure. Overall, maybe it's leg 1, complex pullback. Leg 2, 2 legs up for the bulls. It doesn't look very symmetrical, but I am curious how close it is. So here's leg 1, here's leg 2. So pretty close to that measured move. So more reasons for bulls to take profits, plus the approach to that target. Again, 3 pushes up, not ideal for the bulls. And then bad follow through on 65. Looks like a weak stop order sell after 2 consecutive bull bars. Low probability, but bears can sell for a swing. 66, high 1, but context is bad. Overall trading range day, 3 buy climaxes, and then bad follow through. We're going sideways. 66 is a high 1, but there's probably sellers above, and a deeper pullback is expected. And then we went outside down. 67. Now we have a second reversal below 65 and then below 67, which was a strong bear bar. And if you're betting, it's an overall trading range. We're overbought, probably going to come back and test somewhere in the middle. Pause bar 68, but it's a high 2 signal bar, but it closed below its midpoint. It's following an outside down bar. 3 of the past 4 bars have been bear bars. This is bad follow through for the bull breakout. There's probably sellers above, probably going lower. 69 rallied, did not quite get above, and then we're going lower, testing the breakout point, or you could argue testing the prior high of the day there. Maybe this was the breakout point, which 67 was vacuumed down to. 69 becomes the high 2, high 1 above 66, high 2 above 69. But a high 2 when you're high in a trading range, which this looks like we are. Best case for the bulls is it's a broad bull channel. And it's a breakout attempt of the channel line, which the expectation is a reversal within 5 bars and then a test of the trend line. So this is a low probability breakout for several reasons. 3 pushes, channel line, high in a trading range, and then bad follow through. So probably always in short because of context up here. And again, high 2, but in this context, this high 2 is a trade. Better to sell above than buy above. This is not a strong bull trend. Outside down 70. Probably going lower. Again, we tried to break out of the channel line and failed. The expectation is a test of the trend line. And then breakout and follow through, going lower, 71. Probably going to come back and test the trend line. The momentum is good for the bears. No buying pressure through here. Really nothing for the bulls to buy. 72, vacuuming down to the trend line. We're still getting a higher low. The bulls hoping we reverse up here. It is strong, but it looks like a vacuum test of support. So as far as selling here, we're not really breaking out below. If this was occurring down here, maybe, but we're not even below bar 51 yet. So we're still testing the broad bull channel trend line. So for now, this might be support. Bears might look to take profits here, and bulls might start to look to buy. 73, bull trend bar. Not high probability to buy above, but traders will buy below it. It's a bad low one short at support. And as far as buying above, hard to buy above because this might all be one leg down with no decent trendline break. And again, not much buying pressure. The first reversal attempt will likely fail. Bull bar 74 going higher. Testing the moving average, probably buyers below 74. Bears were sold to close here, disappointed with this rally. They'll probably look to exit on any pullback. So now this pullback of this, here's a bear breakout, pullback. The pullback grew to a distance that this pullback itself is likely to get its own second leg. And then 75, we rallied even higher. So here, yeah, you can call it one big leg, even though there were technical pullbacks on the way down. So one way to count the legs, if you're using pullbacks, is leg 1, pullback, leg 2, pullback, leg 3. Another way, maybe bar 70 resets the leg count. Here's a bull breakout, bull flag, bear channel, and then a bear breakout of a bull flag. That's a surprise. Bar 70 is leg 1. And then we have a deep pullback on 71. And then this is the start of leg 2. So leg 1, deep pullback, leg 2, and then maybe a pullback, leg 3. Probably more clear on a lower time frame that there was some sort of parabolic wedge testing support here. So greater risk of reversal. And then we rallied for 3 bars, but we're testing an area where the bulls got trapped. Bulls buying here, betting we had a bull flag. They would have gotten trapped buying below 69 or anywhere in this area. So on a retest, even though this looks strong, the selling into the close here could already be 2 legs. So we rallied up to 74, pulled back, maybe a second leg trap, 75 testing resistance, and then traders sold on 76. We're high in the range, probably going to come back and test lower. Big bar 77, bad high 1, sellers above, might go a little lower, but you can see the bears have gotten a second leg, and the bulls will likely get a second leg as well. Inside bar 78, so it's an inside bar, reduces the probability for breakouts, probably buyers below. The rally should get a second leg. And then 79 could be that second leg. Resistance above, closing in the middle of this tight trading range, probably going more sideways. And we rallied on 80, but failed to break out. 2 legs up, probably sellers above and sellers on the close of 80. And then 81, sideways to down. For always in today, I thought it was always in long coming into the day, but I like to wait for more information than just a big gap up. And then after you get 3, 4, 5 consecutive bull bars, it's probably always in long, buy for any reason. Through here, still always in long, but on this retest, this was enough to convert the market into a trading range. So sellers up here, probably always in short because of context up here. And then bear breakout here, but 3 pushes down, low in a trading range. If you're low in a trading range and it looks like it's always in short, it's opposite day with always in trading ranges. So consecutive bear bars, but low in the range. Probably always in long here, and then it can flip very quickly. But then back up here, 1, 2, 3, buy climaxes. Looks like good consecutive bull trend bars, but probably always in short. And then this bar, the bad follow through confirms it. Through here, we're testing the trend line, so it looks bearish, but always in long because of context. It's kind of backwards in trading ranges. 3 good bull bars, but high in the range, probably always in short here. It just keeps flipping back and forth like that. For stop orders today, I thought bar 4 was reasonable. It's a high 2 after a big gap up, and a good signal bar, even though it's an inside bar. Maybe wait for a couple of bull bars, buy above 5, 6, maybe 8, buy the close after 8, maybe 9 and 10. And then 18 was reasonable, but the upside was limited because of this breakout. You're expecting sellers at the new high. Consecutive inside bars on 28. It's not ideal because they're dojis. Really not II. It's more of a triangle. But the point is, it's a triangle at the top of a trading range. And we've had 2 legs up. Here we've had maybe 1, 2, 3 pushes. Breakout mode, probably going to go at least a little bit lower. All through here, limit order trading. I mentioned you could sell below 47, taking a chance for a swing. But then you get the reversal, 2 legs down, 51, maybe you buy above 52. That's another swing trade. And then I thought you could sell below 67, 68, 69, even 70 you could sell, expecting a little more to the downside. 73 you could buy, betting it's a couple of legs down, testing the trend line, decent signal bar. But as a scalp, you're looking for where the bulls got trapped above and looking to, you're not expecting a bull trend from here, especially after all that selling. For limit orders today, I thought buyers below 2, maybe sellers above 3 or 1, but then we got the breakout on 8, followed through 9, so limit order bears giving up here. First reversal below 11, buyers below. 14 weak signal bar, traders could buy below, and if they scaled in with a wide stop, they could make money. I thought sellers at the new high on the retest, and because it was 3 pushes up, it was reasonable. Even though the selling pressure was weak, this was a deep enough pullback to disappoint bulls. And then 26, bad high 1, sellers above. Limit orders all through here. Buyers below bars, low 1 at the moving average. High 2, but tight trading range. All through here, sellers above, buyers below. Eventually, limit order bulls get trapped. Let's think about it here. If you buy below 43, 48 is your entry bar. Bulls are disappointed. They were hoping it would rally further, or at least close a bull, or at least have a close that was bullish, and then they give up. But then, low 1 below 50, that's a weak signal bar, low in the trading range, buyers below. First reversal attempt will probably fail after 3 or 4 consecutive bull bars up, so 54 you could buy below. Weak signal bar here, buyers below these bars. Buyers below 61 finally triggered, and then high 1 above 66, sellers above. Sellers above these bars, probably going lower, outside down. Breakout point test during 71. 3-bar micro channel, you could buy below 75. Look for a second leg, and then probably sellers above this bear leg. That's about it. And then for the day type today, it's a trading range day, and it's mostly horizontal. And the end of the day was sort of a triangle with higher lows and lower highs, breakout mode. So where do we go tomorrow? Today was interesting. When you look at the daily chart bar, it looks like a very strong bull trend bar, but when you look at the 5-minute chart, it's clearly more sideways. So it's a bull trading range day, but you have within the bar lots of two-sided trading. So it might just be a big down, big up. We're high in a trading range here. Probably get bad follow through tomorrow. Probably sellers above today's high, but we may go maybe not directly above. However, it could be. This is a pretty broad trading range. But I am expecting disappointment for the bulls tomorrow. Plus the bears, this could all be one breakout. Maybe we're getting close to a 50% pullback of the sell-off, which we did reach today. So we're expecting resistance there. If we do get to a new high, if we are going to a new high, we're probably not going straight up. It'll probably be with more two-sided trading. This is a big up, big down trading range in here. Please feel free to leave questions in the comments and include timestamps for any question specific to this video. I apologize for the short video. I know I didn't go into much detail today, but I appreciate you watching today's video, and I hope everybody has a good rest of their night.